Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. We are going to look at the diamonds, which is the Dow Jones Industrial Average ETF, and we're going to look at this first because an interesting thing happened this week. And as you can see from my lines last week, we did drop as I said it would, and we closed this week below the bottom triangle support level here, or the trend line, and we see that on higher red volume. So that's a big flag, and we have to keep that in mind as we look at the other indices, because if we now break down below the 200 period moving average next week, you'll most likely see an increase in the volume here, which will tell us that the sellers are really starting to move into the market. So what I'm going to do is I'm going to remove the line that I drew from last week, and I'm going to project the line for next week, and I think this is what it's going to look like. The increase in selling volume as we're approaching the 200 period moving average tells me the sellers are picking up momentum, and I think there's a good chance we will drop below the 200 period moving average, so keep an eye on that. That's my forecasted trend. I will leave that up until next week so we can compare notes and project out the week after next. So again, keep in mind that we did break down below the triangle and we are moving lower. Now if we look at a more broad-based index, and that's the Russell 2000, you'll see that I left my line up here as the projected trend. We're following that nicely, and we had a big red candle today as once again we're approaching the 200 period moving average. So what I'm going to do is I'm going to redraw this trend line, and I'm just going to more or less show the break. I think we're going to break down below the 200 period moving average. We have what looks to me like a head and shoulders pattern. This is a left shoulder, that's the head, and that's the right shoulder. If you're interested in learning more about head and shoulders patterns, then go to the Market Guys website, click on the video link right there, and scroll down. This is our video library. We call these market shots, and you'll see there's a number of different ideas and strategies. This is the head and shoulders that I'm talking about. See the left shoulder here, the head, and then the right shoulder. Again, compare that to what we see in the market. It's textbook head and shoulders pattern here, and a breakdown below the 200 period moving average is also a breakdown in the neckline, which is again very bearish, and we have gaps below the market in the Russell 2000, so I think we're heading towards those gaps. If we look at the S&P 500 ETF, you'll see that again the trend line that I drew, the projected trend line, followed perfectly. I will again remove that and redraw to a lower level. I think we're going to see this at the end of next week. Again, increase in volume down here. Look at that. If you're following the market, guys, you'll know that when prices are dropping and volume is increasing, that's bearish. Remember, the increase in volume is more or less showing us the gas pedal. Are they pushing on the gas? Yes. They're accelerating in the downward move, and that's why I think we're going to break down below the triangle there. Remember, we already saw that on the Dow. I expect the same thing to happen in the S&P. If we look at the Qs, that's the NASDAQ market, and that's called the Power Shares. That's the ETF for the NASDAQ market. Again, I left my lines up there. Perfect. We did drop down. We tested this line. I do believe that the NASDAQ market might even find a little support, but because the rest of the markets are looking so bearish, I'm going to project this out and forecast that we could very well go down here to fill this gap. So there's my projection. I think we're going to break down below the support to come down and fill the gap, and then we'll have to reevaluate from there. If you have been a subscriber to the weekly market report or any of my trade alerts, you'll know that I follow the VIX quite closely. This is the market volatility index, and it works contrarian to the S&P, and this was my forecast. I thought we would go up and bounce off of this line. Well, guess what happened? We did just that. So here's my new forecast for the VIX. I'm going to draw a more or less a triangle pattern here connecting these tops. So I'm taking this high, drawing it to these highs, and projecting out to this high. I think the VIX is going to break out here and retest or maybe even break out of this resistance high. So if we break out of this upper line, the triangle line, then that's going to be bearish for the S&P. And remember, I already showed you the signs in the other indices, the Dow, the S&P, Russell 2000. They're all looking bearish, so that means it's a bullish indication for the VIX. The volatility index is my most important leading indicator, and it is first followed by the volume that we look at in some of these stocks and indices. If the volume is increasing, that tells you the motivation level of those who are setting the trend, and right now volume is increasing on the way down. So remember, follow us along with the Market Guide videos. Go to the Market Guys Facebook page. You can also go there and subscribe. I do put out market commentary quite often, so don't be shy about that. It's all free there. Those videos are free. The Facebook page is free, and I'm hoping you're taking advantage of this. So have a great weekend, and we'll speak with you soon. So long.